China's Alibaba strives to hold New York listing amid audit dispute. Alibaba NYSE Baba Group Holding Limited on Monday said it had paintings to maintain its New York Stock Exchange list alongside its Hong Kong list after the Chinese e-commerce large changed into placed on a delisting watchlist with the aid of U.S. authorities. Alibaba inventory became down 4.5% in a near-flat Hong Kong marketplace in early change, following its 11.1% decline in New York on Friday. The employer on Friday have become the brand new of more than 270 companies to be added to the U.S. Securities and Exchange Commission's list of Chinese organizations that is probably delisted for now, not assembly auditing requirements. The Holding Foreign Companies Accountable Act (HFCAA) is meant to address a long-running dispute over the auditing compliance of U.S.-indexed Chinese companies. It targets to dispose of foreign organizations from U.S. exchanges in the event that they fail to comply with American auditing standards for 3 consecutive years. Alibaba on Monday mentioned being introduced to listing intended it changed into now considered to be in its first non-inspection year. Alibaba will hold to screen market developments, follow applicable laws and regulations and strive to maintain its list status on each the NYSE and the Hong Kong Stock Exchange, it mentioned in a declaration to the Hong Kong Bourse. U.S. regulators had been traumatic entire access to audit working files of New York-listed Chinese organizations, which can be saved in China. Beijing bars overseas inspection of working files from nearby accounting corporations. The U.S. regulations give Chinese businesses till early 2024 to conform with auditing requirements, though Congress is weighing bipartisan regulation that could accelerate the cutoff date to 2023. China has mentioned each aspects are devoted to achieving a deal to clear up the audit dispute. Alibaba mentioned ultimate week it planned to use to transform its Hong Kong secondary listing to a dual primary list, which would make it easier for mainland Chinese buyers to buy its stocks. A twin list would allow Alibaba to apply for admission to Stock Connect, the scheme connecting Hong Kong and mainland exchanges. Analysts envisioned there could be $21 billion well worth of inflows from mainland buyers into Alibaba stock through Stock Connect. Graphic: Alibaba's inventory overall performance. Alibaba's Hong Kong listed stocks have fallen 49% from 176 Hong Kong dollars on the time of its secondary listing in November 2019 to 90 Hong Kong dollars and 15 cents on Monday. In New York, its stocks were indexed in 2014 at $68 every and are buying and selling at $89.37. Both units of listed stocks are down nearly 25% to date this year because the employer battles the delisting chance, ongoing Chinese tech regulation, and the prospect of its founder Jack Ma ceding manage of the firm's affiliate Ant Group. Analysts at Jefferies described Alibaba's proportion charge drop as a knee-jerk response to the news of a capacity delisting, and introduced that the 2024 deadline for Chinese American depository receipt delisting gives China adequate time to clear up its audit troubles. China is severe about trying to clear up the audit issues with the U.S., and talks will retain, they wrote.